Nvidia just reported earnings. The stock is up about 7%. This is fresh off the press here. So quarterly revenue, $6.05 billion. That is down 21% from a year ago, but the street expectation was $6 billion. So it was a slight beat on the revenue at $6.05 billion versus $6 billion expected. Earnings per share beat as well, 88 cents per share versus 81 cents expected. AI is in focus here, of course, and honestly, if it weren't for AI, the stock would probably be a lot lower. It's been hyped up quite a bit. This is one of the favorite picks in AI, and we've been talking about Nvidia being a top AI stock, the top AI stock, the pick and shovel stock for AI. We've been talking about it for a couple of years. Now, I bought this stock back in 2018 in the 30s. It's over $200 a share. In a little bit here, we're gonna look at a chart and I'm gonna tell you where I think the stock could be headed next. Now, data center was up 11% from a year ago. And if you look through some of the rest of this, fiscal year revenue, $27 billion, that's flat from a year ago. Quarterly and annual return to shareholders, $1.15 billion. and $10.44 billion respectively. So that $6.05 billion number, it's down 21% from a year ago. Of course, this had a lot of pull through from the pandemic. When you think about personal PCs, of course, we've seen stocks like AMD and Intel and others get hurt, both CPU and GPU. You also have to think about Bitcoin mining, which has impacted this stock significantly as well. A lot of those GPUs were being sold on the used markets. They're not selling as many of those. They are continuing to design some of the most advanced chips in the world. When you think of data centers, when you think of these huge supercomputers for AI processing, you look at GAAP earnings per diluted share, that's $1.74. That's down 55% from a year ago. And a lot of these numbers are down, but they did beat the expectations. The bar was low. And you're going to see this quite a bit. And a lot of investors confuse it with like the company's crushing it. It's not that Nvidia is necessarily crushing it when you look at year over year, but the expectations were beat and there's a lot of hype and hope for this stock. And I think towards the end of this year and in 2024, you're going to see a rebound in a lot of those areas. And I think investors are jumping on the train now, knowing that this stock will be worth more later. It is richly valued, and we'll look at that here later. So Jensen Huang said here, AI is at an inflection point, setting up for broad adoption, reaching into every industry. I agree. From startups to major enterprises, we're seeing accelerated interest in the versatility and capabilities of generative AI. We are set to help customers take advantage of breakthroughs in generative AI and large language models. Our new AI supercomputer with H100 chips, these things are absolutely insane. And its transformer engine and quantum 2 networking fabric is in full production. So the stock is running hard really on future projections and hope about AI primarily. When you think of data center, it's not just cloud services, but it's also going to be those AI machines. You think of these huge supercomputers that have to process tons of information for things like ChatGPT, Bard AI and so on. Chatbots are all the hype right now, of course, right? And I mentioned this earlier as well, but gaming is recovering from the post-pandemic downturn, with gamers enthusiastically embracing the new architecture GPUs and AI-neutral rendering. Nvidia, of course, is partnering with leading cloud service providers to offer AI as a service, everything as a service, software as a service, training as a service, batteries as a service, AI as a service, everything as a service. Customers will be able to engage each layer of Nvidia AI, the AI supercomputer, acceleration library, software, and so on as a cloud service. This is a big deal. You can see the numbers here. I mean, if you look back to FY22, this is down 21%. You can see the operating expenses are up 27%. Operating income is down 58%. Net income is down 53%. Diluted earnings per share down 52%, and so on. So for guidance, they expect revenue to be $6.5 billion plus or minus 2%. And then GAAP and non-GAAP gross margins, 64.1 and 66.5% respectively, plus or minus 50 basis points. Now, data center was up 11% from a year ago, but down 6% from the previous quarter. $3.62 billion of revenue. That's decent. I mean, I think a lot of people expected this to be a lot worse, and it's part of the reason the stock is going up after hours. They also announced a partnership with Deutsche Bank to extend the use of AI in the financial services sector. Also working with Dell Technologies, you can see 15 next-generation Dell PowerEdge systems available with NVIDIA acceleration, enabling enterprises to use AI efficiently to transform their business. Gaming was down 46% from a year ago, up 16% from the previous quarter. So we're starting to see a bit of a rebound here. There was huge pull through and a lot of tough comps from the pandemic. People at home playing games. Once you buy a new rig as well, you're not going to buy one for a year or two generally, right? So lots of new products in gaming you can see on your screen. Professional visualization, fourth quarter revenue was down 65% from a year ago, but up 13%. So a little bit of recovery here as well. Automotive, and this is where I think there could be a lot of growth for Nvidia. This was a record $294 million. Still a small part of their business, but up 135% a year ago and up 17% from the previous quarter. Now I'm very focused on semiconductors within automotive because there is a lot of secular growth trend. There's a lot of growth left in this sector, in this segment. You think of electric vehicles are only 10% of global sales in 2022. And it's not just electric vehicles, it's really just cars in general. More and more semiconductors and equipment, smarter cars, computers on wheels. So Nvidia stock rises after slight beat driven by AI chips. And there's good old Jensen Huang, CEO right there. And you can see here earnings per share adjusted, beat. We mentioned this, revenue, slight beat, 6.05 billion versus 6 billion. I wanted to read this part really quick and then we'll look at a chart. Nvidia also said it shipped fewer chips for game consoles during the quarter, which is also reported inside the gaming category. Nvidia has a successful business selling chips to console makers. Nintendo uses Nvidia to power the Switch. All right, next, let's look at a chart. Before I do that, I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join our private community and Discord by visiting patreon.com/firedupwealth. So Nvidia guys, we've played this one very well in Discord and even here on YouTube talking about, buying this thing closer to $110. It got to 108. We started buying this stock. Now I've owned this stock since 2018. I bought it in the 30s, but we really had this targeted down here close to this 108. We weren't sure if it was going to get quite that low. We said 112 to 121 and went a little lower to 108. You can see this thing rallied pretty hard since that bottom at $108. It's $226 post-market. So this thing has been over a double basically since this 108 low here in October. So you're asking, is this stock a buy now? And you can see it got to about $230 and it rolled over. It got closer to $200 and now it's back in that $230 range post-market here. It's at $226. So up here at the top of this resistance, these are Fibonacci pivot points. You're looking at about $247. It could run up back to that. It's probably going to have some resistance along the way around $230. The question is, do you want to pay this type of price, this type of premium for this stock? It's trading right now well over 50 PE ratio. I think I looked at Google. It was like an 88. Of course, that's not adjusted to earnings. When you think about this company longer term, I think it's a great long-term investment. Do I want to buy it right here necessarily? I personally don't. I like buying stocks when they're down here and not after they've run pretty hard, So I've had a full position in this stock for years. We were buying this in the community portfolio, really 150 or less in dollar cost averaging at 226. The risk reward, I'm not real so sure about that. And you have to remember that this could see some volatility in coming quarters. Short term, stock's probably going to go higher. It might get up to $250 if the market stays bullish. The question is, do you want to pay this type of premium at $225, $226? I personally would not want to. If you're a trader, it's a different story. I'm talking about long-term investing here, but do what's best for you and for your money. If this video is helpful, make sure you subscribe. If you're new to the channel, click that bell for notifications, drop a like and comment. Have a great rest of your day. Take care.